Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it free fall because that seems to be the mode that we're in. We've had two very hard weeks down, and a lot of the indicators and the breadth is very, very negative. So we're going to take a look at the NASDAQ Composite, NASDAQ 100 today. We're going to look at a little bit of the energy sector because it was the worst performing sector this last week. And then I know the put to call ratio spiked, equity put to call ratio spiked on Friday. I'm going to put that in perspective for you. All right, so let's start off here with the side by side of the Dow, the S&P, and the NASDAQ. Okay, the Dow was down 1,232 points this last week. The S&P down 180, and the NASDAQ Composite down 580 points. So interesting thing is the Dow closed not only below the June weekly close, but it closed below the low of that week also in here. So we've punched to a new low, down 20.8% from intra-week high to intra-week low. And then when we look over here, we've got the S&P and the NASDAQ Composite have not done that yet, but they're very, very close. The other thing I notice over here, we've got a gap down here on the Dow that is 1,100 more points, and we will be closing that gap. So I think that's probably going to happen fairly quickly. Let's take a look at the Dow and the transports, Dow Industrials and the Dow Transports. So side by side here, they are in sync now. Okay. They've gone where they've been in sync, and then they got a little out of sync, but now they're back in sync with the Dow going to new lows with the Dow Transports. I keep saying the Dow, and I mean the industrials with the transports, and the transports are leading us down. But now they are both in sync, confirming the bear market mode that we are in. The transports are down pretty well, down 34.5% from intra-week high to intra-week low, and that's back the last week of October. And we've already talked about the Dow Industrials. Now let's take a look at the NASDAQ Composite. Okay, here is the NASDAQ Composite Index. It was down 198 points on Friday. Now you can see all the major indices got this look like this on the candle, because the last hour of the day, they kind of rallied it back, a little bit of the bulls trying to take control, but I think, it's just a little bit of covering, I think. Going into the weekend, the interesting thing, we broke this trend line here on the 15th, which I think was a week ago Thursday. And then we came down, continuation, and then pulled back into like the classic kiss goodbye to the trend line, and then rolled over hard on Wednesday and then Thursday and Friday to the continuation. Now, when I look at the Elliott Wave picture I've got, we are in intermediate wave 3 down. We are in minor 3 of intermediate wave 3. And within that, we are in another third wave. We're within minute wave 3. So we're in the heart of a very, very strong area of the Elliott Wave pattern to the downside, a third of a third. And, this is a little bit different in terms of intermediate wave 1, a little different from the S&P and the Dow, in that this is a classic impulse wave structure, in that, 4 is not overlapping 1. We've got 1, 2, 3, 4, and 5 waves down. Wave 1 was a leading diagonal pattern in and of itself in here. But other than that, I've got intermediate wave 1 down as an impulse wave, and then we got a zigzag for intermediate 2, and now we are on our way. Now, 95.04, if this were to play out to be what I would call a normal length wave 3, that's my target on the NASDAQ Composite. Let me go back to the moving average view, and let me take a look at the Qs. You're going to see a very similar wave structure. Pattern, okay? We got the breakdown, got the kiss goodbye, and now we've rolled over down hard, just mirroring the NASDAQ Composite. And when we look at the Elliott Wave picture, it is the same thing. My target down here for a normal length wave 3 is at 241. And I do not see 5 waves complete in here. And when you look at the RSI, you know, we are punching to a lower low on the RSI. We are not seeing divergence here on the daily. Okay, so yeah, we don't have 5 waves complete here. Like in June, we had a nice little 5-wave structure that was finishing, and we had nice little divergence at the tail end. So we're not seeing, you know, even though we're getting some extremes on some indicators, we'll talk about that. I'm just not seeing wave structure that says this is ready to end. Okay, so that's where we're at on the NASDAQ and the composite and the NASDAQ 100. All right, I want to take a look at the ETF dashboard real quick. Okay, here we are for Saturday, September 24th for the week ending, you know, the Friday the 23rd. Everything was in the red. It doesn't get any uglier for the bulls than what you're seeing right here. Now, Freefall, look at this. I'm not sure. I know for this year, I don't believe we've seen anything like this in terms of back-to-back, not a single sector up, not a single one, not even utilities, nothing, okay? The worst performer was energy, and then the leader in the index ETFs was the Russell 2000 IWM, edging out the transportation slightly, but pretty negative picture. We had several of these. Look at this, the consumer discretionary 7.3%. And then, you know, of course, semiconductors, but retail, telecom 7.5%. So semiconductors is the worst performer for the year. Energy is still holding in there, but it's looking very, very weak right now. And I'm going to talk about that. Actually, I'm going to talk about that next, because back on August 27th, I talked about energy, and I said it looked like it was getting a little bit stretched, and sure enough, it has rolled over since then. So let's take a look at that. I'm going to pull up XLE. Okay, so here's the picture, down 522 here on Friday alone in XLE because oil really got whacked, and we're going to take a look at that in a minute. But when I last talked to you, a video about this, here's Friday, August 26th. The video went out on the weekend. If I got that right, 29th, 26th, I believe that's right. Anyway, in this neighborhood, let's put it that way. And then that was pretty much all she wrote, and we've rolled over, and we're rolling over hard. Now, the other thing I look at every day is looking at USL. Okay, so USL, United States 12-month oil. So this pretty much mirrors the West Texas Intermediate and the oils. And where did West Texas Intermediate close? 79.36. I think it's going to hit 75 based on what I'm seeing. And it might do that on Monday morning, and we'll see. So right now, here's what I'm seeing in oil. I think we've had 5 major waves up that completed in June, and right now we're in a major corrective pattern. My target at a minimum here on USL is to come down to 28.50 in here. That would be where the C wave equals the A wave, okay? And so right now, that's what we're looking at. It could go deeper. It could go deeper into this prior 4th wave in here. So we'll see how the wave structure looks as we get down into this territory, but I think there's more to come down to the downside. So talked about the dashboard, XLE, USL. Oh, I also want to show you the Bloomberg Commodity Index. Look at this trend line and look what it did this last week, down 4.34. So that's a pretty big negative, I think, also. And of course, that's being reflective of the damage being done in energy and some of the other commodity areas. I mean, precious metals can't catch a bid either. I mean, it's just everything seems to be rolling over hard right now. So this is going to be interesting to see how far down does this really pull back as a part of this trend line break in here on the Bloomberg Commodity Index. Okay, now I want to look at the put to call ratio I talked about. Okay, the equity put to call reading that my data provider gave me for Friday was 1.00. Okay, this is coming from the CBOE Equity Put to Call ratios. So what does that mean? 100 puts for every 100 calls. And so why do we measure it like that? You measure it like that because the market has a bullish bias to it. There has a tendency to be more calls purchased than puts. And so you're always measuring the volume of puts against the volume of calls. Here's the 10-day moving average. We're sitting at 0.76. Now this is what I keep track of, and this is what I show. I color code it like this when it starts to get extreme, when it gets to the 90s, when it gets above 1, okay? And I start to color code the 10-day when it gets into the 80s and above. So what got my attention? Let me get rid of this for a minute. And let me show you this tweet by Jay Capel. And he talked about the fact that we spiked on Friday. And he was saying, okay, is it spike? Is it time to buy? He goes, no, I use this as more of a start looking at things, figuring things out, etc. And he's comparing us to December 2018 and March 2020. Well, it's interesting. He's circling the peaks back then. But this is really just the first really high reading. Okay, there were multiple readings that occurred in here, in both of these. And we're going to take a look at that right now. So let me pull up, let me see which one I've got right here. Let's do December 2018 first. So here you can see we got a couple of the readings in the 90s. Well, I'm talking about the one-day readings, and then we got one that was 1.13. We had 4 days in the 80s on the 10-day moving average. And remember, this was the low close day on December 20th. So fairly decent extreme, but more extreme than what we've got right now. And we haven't even gotten any kind of bearish 10-day moving average reading in here. The other thing to look at is March 2020. Well, look at March 2020 in the bottom and look at where we were in here in March. And remember when the market finally ended, it was down here towards the end of March. But look at the extreme readings, the one-day readings in here. Here's the one-day reading we got on Friday, 1.00, okay? And there were multiple of these. And not only did we get in the 80s, but the 10-day moving average got well into the 90s in here. So can it get a whole heck of a lot worse? Absolutely, it can get a whole heck of a lot worse. And if this market continues to move in any kind of free fall mode, that's exactly what's going to happen. All right, that's it for this weekend. We'll see what happens this coming week. Everyone, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone, have a great week. We'll talk to you on the next video.